Hi everyone, welcome to today's video. So in today's video, I'm going to help you understand how to invest your salary in the stock market. Now, if you are sitting on a salary of 25,000, then your investing style might differ drastically compared to a person who makes like more than 1 lakh rupee a month. So what investing style should you adopt as per different salary levels? I'm going to help you understand in very simple, easy to understand language. More importantly, I am going to help you understand how you can generate real wealth and how much real wealth can you generate at each salary levels if you follow this investment plan. Now, before jumping into the core of the video, please understand that irrespective of your salary level, risk mitigation is extremely critical and important. Now, one way of hedging your risk is to buy insurance, which brings us to the sponsors of today's video, which is Ditto Insurance. They are a wonderful platform for buying insurance. I have personally purchased my insurance from Ditto Insurance, and you could consider doing the same. They do free consultation, spam-free calling, and also help you in terms of claim settlement. They are also looking to hire people in their advisory team. So do check out links in the description and comment box in case you are interested in this opportunity. So with that said, let's move over to the main video. So let's jump right in. And before discussing each salary level, let me first and foremost discuss a very interesting case study about Mr. Nikhil Kamath. So Mr. Nikhil Kamath is the co-founder of Zerodha, and this is how he invests his money. Now, when this data was released in the market, many people started commenting that, you know what, Mr. Nikhil Kamath is the owner of Zerodha, and it's a big equity investment platform. He has a lot of data on equity investors, and he himself is investing how much money in equities? He is only investing 50% of his money in equities, 40% to debt. That means fixed deposits. So he has done like fixed deposits so much, and government bonds, and gold only 2%, and real estate 5%. So does it make sense that person who deals in the equity stock market almost every single day, he is investing only 50% of his wealth in equity market? So why is it that people like you and me should invest more money in the equity market? This is a very important question. So let me help you understand that. It will drive a very important point home that investing is a very personalized subject. So here is my understanding of why Mr. Nikhil Kamath is investing only 50% of his money in equities. Why not more? So there are two central reasons. So first and foremost, his core business is what? His core business is Zerodha. So when would Zerodha's profits go up? Well, Zerodha's profit would go up when the equity market is running. Because when the equity market runs, a lot of investors jump in, they start doing FNO, they start doing trading, they start doing investing, bus shoot rahi hai, so let us just invest. So when will Zerodha make money? Well, when the equity market goes up. Now, if Mr. Nikhil Kamath is investing his money in equities, and if a situation comes when the profits of Zerodha starts going and also his wealth in the market starts going down, so it might become a problematic scenario for him. So basically, because his core business, which is Zerodha, has a direct correlation to stocks, so what he needs to do is that he needs to create an inversion. There is a direct correlation between Zerodha and equities, but in terms of Zerodha and debt, there is an inverse relationship. So investing less money in equity is a risk mitigation strategy for him. It's not as if that he does not believe in equities. So that is my understanding. Second key point is that as your portfolio grows from like a small portfolio to a bigger portfolio to a really big portfolio, your goal also changes. For example, if you're sitting on a massive portfolio, right, then a part of it needs to be protected. So wealth protection becomes a very critical goal for almost any investor, especially when you're sitting on a huge portfolio. So these are two central points why I think that Mr. Nikhil Kamath invests only 50% of his money in equities. I hope you would agree with this viewpoint, and also please press the like button so that these type of videos reach out to more people. I teach stuff in a highly conceptual manner. ऐसा नहीं कि सिर्फ आपको बता के छोड़ दिया and that's it. I also give you logic, rationale behind it. Of course, you can agree, disagree with me. Also, I know that you haven't pressed the like button, so please press it and we will continue the video. And now let me start discussing 4 salary points or 4 salary levels as to how you should be investing your money. So the first salary level might be a salary range of 25-30K. This might be happening if you are in the mid of your career or if you have just started your career. So you might not be getting paid a lot. Now, if your salary falls below 25K, should you think more about investing? Yes, you can apply some of the principles that I'm talking in the video. But the first part that I'm going to discuss is how to invest a salary of 25 to 35k. Now the first point is that many of you would think that 25-35k is a very low salary level. इसमें तो क्या ही बचेगा? I will not be able to make any savings only. So why even bother about investing? Now of course that can happen depending on your expenses level. I can't comment on that. But to a general investor, I would always recommend that please save 10 to 20% of your salary. I am a big proponent of frugal living. So I will work with the assumption that you are able to save 20% of your salary. That becomes your discretionary level of income that you can invest. Again, if your salary is less than 25k, now many comments might come that my salary is 5,000, 10,000. Then don't worry, at some stage it is going to increase. Then come back to this video and apply this plan. So okay, so point number one is that I will assume that you will be able to save 20% of your salary at 25k levels. Now 20% of 25,000 is 5,000 rupees. So that becomes your investable level. Now again, please don't complicate the video by bringing it taxation lagega, this, that. Okay, I'm trying to simplify the video, not complicate the video for you. So let's work with the assumption that at 25k level, you will be able to invest 5,000 rupees salary. Now our goal at 25k level easily becomes, especially when you're starting out in the stock market, is to grow your portfolio at a CAGR of 13%. Now, how to achieve that 13% gains? I will talk about it in a minute. Many of you would say, "Aapne kiya 13% gain." Yes. So please take a look that I am sitting on a big portfolio that if I can get 14-15% returns on my mutual funds, stocks mein to mera aur bhi zyada hai. So I can definitely tell you that by adopting the following investing style, you will be able to make 13% returns. So you are investing 5,000 rupees at a CAGR of 13% for a period of 30 years, because you might be young, you might be 25, 30 years old, making 25k. So at least 60 years of age, you will be investing your money. So how much is the total corpus? So the total corpus comes out to be 2.21 CR. Okay. So this is the eventual money that you will have. Now, many of you might say, yeah, 2.21 CR is what I will get after 30 years. So what is the value of that money that I will have now? Inflation will eat into that money. 100% agree. But see, what happens is that, for example, if this year your salary is 25,000, probably next year there will be an increment. It will be 30,000. Then year after that, there will be another increment. It might become 35,000. So I'm assuming in this model that your increase in salary will offset inflation. So this 2.21 CR is the real wealth that you can generate with a salary level of 25,000 as of today. So, okay, if you are at a salary range of 25,000 to 35,000, then basically the target that we are assuming is that agar aap 13-14% return bana lo, then you will be sitting on a healthy portfolio. Now, here, what is the primary goal that you have? Well, your primary goal, first and foremost, is wealth preservation in the stock market. This is a critical goal for you. Why? Because majority of your time right now, when you are at 25-35,000 salary range, should be to actually increase your active income. So rather than spending crazy amount of time understanding which stocks to buy, which stocks not to buy, vagera vagera, the strategy that you should follow in the stock market is that you make 13-14% returns. That is very doable. That is sensible for you. Plus, invest the time in terms of doing your primary job. If you're a software engineer, if you're a digital marketer, whatever that job is, increase your salary level. That is your primary goal right now. Your primary goal is not to make crazy returns from the stock market. So how you can make 13-14% returns? For this, I will tell you 3 very simple points. First and foremost, please learn how to do index investing. Now, there are different types of indexes. For example, there is Nifty 50 index, right, which is the collection of top 50 stocks. There is something called as ITBs, right? So this is the collection of IT stocks. Similarly, there is a PSU bank index. Similarly, there is Nifty Bank. So when you go and invest in index, what ends up happening is that it is very unlikely. Please notice the word unlikely. It is very unlikely that you are going to lose your money. Why? Because these are some of the most stable assets, so to say. For example, if you buy Nifty 50 or ITBs, ऐसा थोड़ी होगा कि it will get crushed by like 50-60% all of a sudden. That can happen in a bear run when some kind of major crisis happens like COVID, 2008 वगैरह. So leaving those exceptions aside, in general circumstances, index investing is considered to be one of the safest form of investing in the stock market. Please notice the word safest form of investing in the stock market. Otherwise, तो सिर्फ FD बचता है और कोई option नहीं है. Now comes the more important and interesting question here is that should we invest our salary in whatever index we see? The short answer is no. It's not as if that Nifty 50 you just continue to invest whatever levels. No, right now, for example, take a look at this chart. This shows that Nifty 50 right now is at its record levels. Now, if you go and invest your money right now in Nifty 50, should you be doing it in a lot, especially in bulk? The answer is no. On the flip side, if you pick Nifty IT, it is trading roughly 25-30% discount. Should you pick that index? The short answer is yes. So this is the first critical point that you should understand, that invest in index, but primarily pick indexes that are somewhat undervalued. Then comes the second key question, that you should go ahead and invest in large cap stocks. Now, what are large cap stocks? These are blue chip stocks जिनके बारे में आप सुनते रहते हो. Hindustan Unilever, HDFC Bank, Bajaj Finance, this, that. Okay. Now, here what happens? Now, again, these companies have clean management. There is no major problem going on. Now, as long as you are getting these large cap stocks at a discount, you should go ahead and buy it. No problem there. So for example, take a look at HDFC Bank. Right now, HDFC Bank, is it overvalued, undervalued? Bhaiya, aapko din bhar baith ke you will not be able to analyze it, whether it is overvalued or undervalued, but you can run like basic understanding. For example, if you learn economics, finance, stock markets from my videos every day, hardly 20 minutes of investment every single day, you will understand all these techniques. For example, this is a channel trading technique, right? I had applied this on Nifty 50, right? Bought Nifty 50 in bulk at 15,500 levels, applied it in Hindustan Unilever, applied it in a bunch of stocks, and now I'm sitting on handsome profits. Now, from that perspective, HDFC Bank, we know that it is a fundamentally good stocks, right? And one could argue that if you take a look at from a long-term channel perspective, why are we picking long-term? Because see, right now, when you're at 25-35,000 salary level, what is the goal? The goal is to increase your salary first. You don't have time to, keep rotating your portfolio, this, that. But yes, if I make a video, you get to see, yaar, Akshat bol raha hai, you know what, it is like at somewhat of an undervalued level. Let's understand his rationale. So the rationale that he's giving is that, okay, from a long-term perspective, if you take a look, 2018 up until now, this is the channel that HDFC Bank has followed, and it has broken this channel as of now. So this was discounted here definitely, and here also it is discounted. Then one could argue that it is discounted. Now, it's not as if that you just need to trust me and buy the stocks, do your due diligence after this, but at least I'm explaining you some funda, some logic there. I'm not just, doing this ki, okay, haan, ye hai, bas undervalued, yeah, this is overvalued. No, I'm giving you some logic there. Similarly, there has been so much noise made on DMart ki bhai sab pata nahi kya ho gaya ki, DMart is not going to stay alive only like after 5 years because it missed analyst expectation on results. So it's not like that, right? So whenever you see certain stocks trading outside its channel, if you understand it that, okay, this is a large cap, blue chip type of a company, yes, there is an understanding why it is trading at a discount, you should buy these large cap stocks. So the first 2 points are that buy index at a discount, buy large caps at a discount. So this way you will be able to generate an above average market return. Just for example, if Nifty is growing at 12%, which it typically grows at 12%, then you might be able to make 13. Okay. Now comes the final bit, that when it comes to volatile assets, for example, I have been saying for a while now that small caps and mid caps, jo stocks hai, they are going to outperform the market. Why is that? Because studies tell us that during a bull run, if the Nifty grows by 100 points, then small caps grow by 200 points, right? So that is what history tells us. Now, of course, this is not as if that this will 100% be followed, but the chances are that volatile assets means slightly risky assets. So small cap, mid caps are riskier than large caps. So these assets should also be added on your portfolio. So very quickly, let's say that you have to invest 1 lakh rupee in the stock market, and if your salary range is 25,000 rupees, then how much of it should go to index versus large cap versus volatile? Then I would give like 80% wealth preservation and 20% growth, right? So 20% growth will come from here, this volatile bit, and 80% wealth preservation depends on opportunities that are there in the market. So if you just simply follow this strategy, then this is a low risk strategy. It allows you to grow your wealth also. And also you don't need to sit and keep tracking markets every single day. Please note the final point that when I say that you don't need to invest crazy amount of time in the stock market, I mean that it's not as if you lagi raho din bhar computer pe, right? So I mean that is not the point, but you will still have to do basic research. You still have to understand where your money is going. You have to develop that financial acumen. So I hope this first level is clear to everyone. And by following this simple strategy, you will be able to make 13-14% CAGR if you take a 3 to 5 year horizon. Now let's discuss the second salary level, which is between 50,000 to 75,000. You might might be like around 30. You might be making this amount of money. Again, you get a good 30-year investment period. So we'll assume again that you will at least be able to save 20-25% of the money. So the worst case that we are looking here is that if we are assuming a salary of 60,000 and if we pick 20% of it, so 12,000 bhar dete hain. So here, if you are investing 12,000 rupees at a expected return of 13% for a period of 30 years, then your total corpus becomes 5.3 CR as of today. Now, why am I saying as of today? Simply because of the viewpoint that again, I assume that if you're 30 making a salary of 60,000, then your salary will grow at least at inflation level, right? So therefore, I'm not accounting for inflation here. So I hope that point is clear. Now I can create very complicated financial models. It does not work. So doing mota math will drive the point home. Okay, so if you are in this salary range, there are 3 additional critical points that you should remember. Additional because wo purane wale to applicable honge hi, but 3 additional points you should remember. So first and foremost is that, see, you are playing with good amount of money. If you are investing 12,000-15,000 rupees a month, or if that is the capacity at which you can invest, then you should definitely take advantage of bulk investing opportunities. Now, what are bulk investing opportunities? For example, right now, I see a bulk investing opportunity in Nifty IT. I see another bulk investing opportunity in HDFC Bank. I see another bulk investing opportunity in something like SBI Cards. I see another bulk opportunity in something like Page Industries. Why? वो फिर video लंबा हो जाएगा. So I will link one of my videos down. You can go and check it where I have discussed all these stocks. So if you are at this salary range of 50-75K, then you are putting enough amount of money in the stock market. Additionally, your emergency expenses might be sorted out. You might be okay in terms of investing your money in a slightly longer term perspective. So let's say that if you are getting a good safe assets. Now, if you are buying Nifty IT, right now it is trading at a 25% discount. Now, it might happen that it goes sideways for a little bit, right? But is Nifty IT a high risk asset? Now, high risk means what? That for example, if starting tomorrow, Nifty corrects by 10%, do you see Nifty IT correcting by 10% more, right? I doubt it, simply because it is already available at a 25% discount, but Nifty is already at its all-time high. So therefore, this is a lower risk asset which is available at a discount. So जब भी आपके पास opportunity आए, and if you have some cash lying around, you can take advantage of these bulk buying opportunities. By taking advantage of bulk buying opportunities is how you generate an additional alpha. What is the meaning of additional alpha? Well, historically speaking, Nifty 50 gives a CAGR of roughly 12%. But if you are able to grow your portfolio at 16%, that's additional 4%. Now you'll say 4% से तो क्या ही फर्क पड़ता है? 2-4% तो हम ऐसे ही उड़ा देते हैं. So do the math here. If 25,000 rupee is invested monthly in the stock market for a period of 30 years at 12%, it comes out to be roughly 8 point something CR, right? But if the only number that changes on that math is 16% return, your portfolio becomes 22.x CR. So yes, it looks only 4% difference, but that is the difference between wealthy and ultra wealthy. It's almost 3 times your portfolio. So you should definitely work a little bit smarter in terms of generating this 16% return. Now, how will you generate the 16% return? Well, by doing some amount of bulk investing on safe assets from time to time. Now, the second critical point that you should remember is that you should generate some cash flow assets. Now, what are cash flows assets? So one would be dividend stocks, because this money gets back to you, right? So you will get some more money to invest. So this is one. Second key point is that you go outside the equity asset class. For example, it could be debt. It could be real estate if you're finding some good deals. So it gives you reliable cash flows. For example, you know that you are going to get FD money at the end of the year. Or you know that aapka kiraya banda is coming out to be like 20-25,000 from a flat that you have purchased. So the point is that once you own these cash flow assets, taking advantage of these bulk buying opportunity becomes much easier. So please focus on that. Third and finally is that you need to add a little bit more risk on your portfolio at this stage. Here, according to me, your goal should be to grow your portfolio. And one of the fastest way of growing your portfolio is to take more sensible risk. For example, in the previous section, when I was discussing 25-35,000 range salary, I said that go 80-20 on safe versus volatile asset. Here it should be 75-25 of your equity investment. Now, if you're fairly young, then you can play around with this number. It could be like 60-40 or whatever you choose to decide, whatever that comfort level is. But please understand the point that as you add more units of risk on your portfolio, it becomes critical for you to have a slightly longer horizon on your portfolio. Now, please don't say that, yeah, Akshat, I purchased like small caps and then it fell by like 10%. Very small caps can fall by 10, 15, 20% very quickly, right? So please don't get stressed by all that. And the only reason why you will not get stressed by all this is that if you have a little bit of horizon, yeah, 4-5 saal ke liye, I do not need the money. So therefore I'm cool with it. So if that viewpoint is there, then good enough. Then this is an investment plan that will work for you wonderfully well. So, okay. So if you are making a salary of more than 1 lakh rupee and if you are investing somewhere around, let's say 25,000 rupees monthly, then I think you're already at that very good investing level. And here you need to understand a few more critical points. So before discussing those 2-3 critical points, let's do the fun exercise and let's see how much money you can make. So if you're making 1 lakh rupee plus, so let's assume that you're doing a monthly investment of 25K. You can grow your portfolio by 15%. How? I will talk about it in a minute. And 30 years ke hisab se, if you see, then you are sitting on a portfolio of 17.5 CR. So this is a fairly substantial portfolio. So what are additional points that you should remember in addition to section 1, section 2 that I spoke about? So there are 3 more critical points that you should remember. So at 1 lakh plus level, you need to segment your portfolio. For example, this is your portfolio. Now create different segments out of it. For example, one segment of your portfolio could be retirement planning portfolio. Now, what is the meaning of retirement planning? That for example, if you are investing, let's say 25,000, then you are probably investing, let's say 8,000 per month for your retirement plan, right? So what type of stocks should you purchase for retirement? So these should be fairly large cap, stable stocks. Yeah, index investing kar lo. So all that stuff makes what? It caters to your retirement planning, right? So this is not for growth. This is for stability. This is for preserving your wealth in a way. Also, you can go to bond investing. So have a little bit of diversification. But why should you do bond investing given the current climate? Well, you should do bond investing in the current climate for retirement planning. Bond से आपको growth नहीं मिलेगी, right? You will not be able to preserve your actual wealth also. So bond is okay in terms of preserving your wealth up to a certain limit, but inflation adjusted return you will not get. So this is point 1. Point 2 is that you need to diversify internationally also. You are putting in good amount of money. So at this stage, start thinking about that I will put 20% of my money that I'm investing in equities into US stocks. Now, why is it critical that you have international diversification? Well, it matters from a wide range of reasons. Right now, I can have that concentrated portfolio versus diversified portfolio debate. See, the world is getting more and more volatile. It is given that economic shifts are happening. Countries are moving away from US dollar. There will be a lot of pain involved. You need to be a diversified investor if you're coming from my school of thought. So I'm a highly diversified investor. I always encourage diversified investing. The thing there is very simple that see, as retail investors, we don't know what the internality of things are. For example, you guys go and read like annual reports. You guys go and read like con calls. आपको पता है कंपनी सच बोल रही है कि नहीं, right? Half the accounts are like, for example, take a look at Byju's, take a look at like bunch of other listed companies also. There is no transparency, clarity, right? Similarly, a lot of people are saying that India's GDP is growing at 5%. Do you know how much of that is fiscally deficit sponsored? So India itself is running a fiscal deficit of 5 years. All these small points are there which you might miss. So I'm not saying that this is good or bad. All I'm simply telling you is that see, being diversified is a very critical issue. You must understand it. So from that respect, it is critical that you do international diversification also. I will at least recommend that you get started with 20%. Over time, I would diversify 40% of my portfolio outside India. Not because I do not trust the India growth story. I'm very much 60% I'll be invested in India. So I do trust the Indian growth story. But at my portfolio size, I need to be highly diversified. On that note, the final point is that you must have a real estate investment also at this stage. 1 lakh plus income level is a good enough income level where you can start thinking about purchasing real estate. It gives you what? It gives you asset class diversification. Asset class means stock ek asset class ho gaya. Similarly, real estate becomes an asset class. The biggest problem in real estate is that it is an illiquid asset. Illiquid means that it is not very easy to sell off. But the point is that by this stage, your stock portfolio would already get built. So from that perspective, you can afford that illiquidity, so to say. Many people say that real estate return nahi banta. Well, the problem is that people do not know how to buy real estate. There is a post that I've done on LinkedIn. I will link it in the description and comment box. You can go and read it almost every single property that I've purchased, it's a cash flow property. I'm making a rental yield of more than 5%. So it's not as if that you don't make money from real estate. You just have to scout for good deals. So I hope you enjoyed this conversation. It was a slightly deeper conversation. Also check out this video if you are investing in mutual funds. Then this video will give you clarity as to how to design your mutual fund portfolio. Thank you so much for watching, and I'll see you soon.